All right, the recording is live. We're back here with Cicero. How was your
Hello.
week?
Oh boy.
Where's my scalps? I'm just kidding. Do you have a busy week, slow week? Were you able to look at anything in the market?
Relaxing week. I did my 3 trades and my what
Ooh,
I think is good for my brand thingy thing.
okay, we like those.
Um, the business notes or whatever. That's what I wrote over here. And then my dad recently got a side by side, so we went out on a
Ooh, okay.
adventure through the mountains. That was fun.
Kind of jealous.
It
That
was a lot of
that's your
fun.
office.
Yeah.
I'll never get over it. I'm just kidding. No, it's good. I mean, you kind of need that. That's good for your, stress reduction, mental health, all that good stuff. Plus, it's good for your eyes, just not be staring at a screen all day. So
Right.
it's better for
Yeah.
you. No,
Breathe in some fresh air.
what's that?
Oh, yeah.
Too spicy. All right, let's get rocking and rolling. So you did your 3 trades.
Yeah, we want to start on that first.
Absolutely. What do you got?
All right, first one. Ooh, I don't want to do that. I want to do that one last so we can segue into the next one. So first one,
Okay.
let's do Joby, Goby,
Goby. Goby.
Joby. My bad.
Oh, J. Oh, okay. That's completely different. All right, and what do we got on this one?
All right, we're doing May 8th, 2020.
Oh, okay. A little throwback on the daily.
Found the name on Discord recently, and then as I was scrolling out, I saw a massive gain, and so I wanted to start at the bottom and see if I could play it out.
Okay. I do have a question. Are you sure it was 2020? Because they didn't have any stock stuff. I don't have any price data before
That is
November.
a great question. One sec, let me pull it up and see.
Sure.
Let's see when I did it.
Ooh, they are diluted. Wow. For what they are, anyway. They have earnings coming up at the end of the month.
Ooh, no, it wasn't 20. It was 2023.
Okay. So my eyes just fixated on that. So May 8th, 2023 is the opportunity you found, right? So I
Yeah, let
assume
me
you scrolled
zoom
back
in
here
and
somewhere.
try to. Well, let me see if I can find where it was.
Sure.
Because at first I thought it was too high, but then I kind of zoomed or scrolled down my prices and it kind of
Mm-hmm.
leveled closer. It was the one on the red candle on the 8th.
This guy right here.
Let's see.
And at
That
the bottom here it says May 8th.
looks correct.
All right, beautiful. Yeah, I put the vertical line there. I just moved it over here so we could see the wicks. So this
Yeah.
is the right candle. All right. So let me go ahead and plot it and see what I would do, and then we'll just compare it to yourself, and then we'll just walk through it. So I'm just going to use the drawing tool here, and I'm not going to make it super accurate, but I will put the right numbers in. So the opening price on this guy is 560, so we're going to set that entry price to 561, and we'll move it over to the next fella.
Why your price
That's
is
not the right
different than
one.
mine?
That was not the right price. Sorry.
I was gonna
let me just
say I
let
got
me just start this over.
446 on
Yeah,
my entry.
it's either Webull being weird or it's my eyes being weird. So let me just plot these lines. There we go. All right,
Looks better.
so we'll just put it on this guy, and then we can just adjust the numbers as needed. So first one here is going to be four. What was that? I just moved this in the way. 446. All right. So entry is going to be 446. So it's 1 cent above the opening price of the red candle. And then we get a stop loss level down here at 425. So we're going to bump that down to 424, I believe. Let me just check that. Okay.
What I had, yep.
All right. And then we just got to raise our take profit to our 1-to-2 take profit ratio. Boom. Let's see what that lands on. Oh, I went a little too far. I could just do the math, but this is more fun this way. So there's 24 cents difference, so 48 cents plus 46 would be 492, right? No. Yeah,
Too
maybe.
much math.
Yeah.
Hurts
491.
my brain.
Yeah, there we go. All right, so it's 490. So I was in the ballpark, but I didn't do the actual math. All right. So this is our 1-to-2 take profit, right? So we would have taken an entry here on the break. On
Computer
the
lost connection.
Uh-oh. Are you back?
Yeah, I can see it on my phone, so
Okay.
continue on the phone for now.
Oh boy. All right. Yeah, so on the 9th, on the 8th, as soon as market closed, we can plot this out. On the 9th, we could have taken an entry as soon as it broke over that entry threshold of the opening price there. We got our risk range defined. We got our profit set at a 1 to 2 take profit ratio. So then on the 12th, we would have taken 75% of those shares and we would have sold them for a profit. And we would let the remaining 25% run. So in this case, we've got multiple candles. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 in a row that extend beyond the 5 candle rule.
Yep.
So in this case, we would have had a partial stop right there, and as soon as this red candle tripped below that, we would have locked 75% of the 25% shares that were remaining. Now in this case, since we're breaking lows, we would start to look for a higher validated low. In this case, we don't get that. I'm just going to color code this one to red so we know where the stop loss is, and I'll make it nice and fat. All right, and I'll erase this one. All right, so at this point, this is not a valid candidate because we have one candle higher, but we have another one here that's lower, so this is invalid, right?
Yep.
Then we look at this guy. We don't have 5 candles in a row, but we do. I'm just going to go 1 candle at a time. You know what?
And so I didn't get any higher validated lows on this run, so.
Okay, let's take a look here. So we've got 1, 2, 3, 4, and then we get a low, so it doesn't do the 5 candle rule. So 1, 2, 3, 4. Jeez. All right, 1, 2, 3, 4, 5. All right, so we got another 5 candle rule right here. So I'll just move that up here so we can track it. And we would have locked some profits right here on 75% fella. So
Yep.
that lines up pretty well so far. Okay.
Yep.
Then we're just chasing lows, lows, lows. And then right here, you've got your higher validated low, right? This guy. So we can move our stop loss.
I might have been sold out before that one.
Yeah, that's kind of crazy. I mean, look at this. But if we follow the system, that allows for things like that to happen. So realistically, you would have only taken 3 take profits so far. And then you've got a higher validated low. So 1, 2, 3, 4, 5 again for another 5 candle run there, just in case maybe you forget this one. Maybe you were sleeping. Just kidding. Either way, we can just trade it till it's gone, right?
Yeah.
Then we get another higher validated low right here. So just for the sake of practice, we can follow this up. So we get 4 candles here, not 5. We get a higher validated low right here, but this guy doesn't actually validate. So no good. And then we're just completely out right here. So
beautiful.
That would have been the last take profit right there. And then that's kind of insane, right? I love it. I should do this for a living.
I was going to say, I think I did, so I made, on this one, I did plus $13 at 10% profit.
Nice. Okay.
The next one's juicy 47% profit.
Oh boy. All right. What do you got for me?
AUR.
Oh, okay. That's a familiar one.
Let me hop onto that one too.
Sure. These are all in the daily, right?
Yep. And this one was June 2nd, 2023.
June 2nd. Okay. June 2nd. All right. I'm just going to put the line right here on the first so we can see the wicks. And I assume that, so for these, I assume you're like scrolling back here somewhere and then you're just walking forward until you find this, right?
I think this one I did just scroll through until I found it. Most of them, though, I do just randomly place them. But these ones I was kind of curious to see if I could find some juicy entries.
All right, for sure. I just want to make sure that that you're not training your eyes to kind of look for things that already happened, if that makes sense.
Yeah.
All right, let's go ahead and take a look and see what we get here. So there would be the entry. There's our risk. Right, so on this day, on June 2nd, when the market closes, we can plot these levels and just watch them into the next day. Next day rolls around, we would have taken our entry right here at 152, so 1 cent above this guy. So let me just draw my tool. It's a surprise tool. It'll help us later. So 152 and 140 are going to be the levels there. 152, 140. So 1 cent above, 1 cent below, and then this is a 12-cent difference, so 24 cents plus 152 is, whoops. Something like that, right? Oh, I was way off. 6. Forget how to do basic math. It's crazy. All right. So at this point, the next day rolls around, we lock 75% profit. Then we get 1, 2, 3, 4, 5, 6, 7 candles in a row, and then we break. I'm just going to change this to a dashed line. Obviously, the entry price is irrelevant at that point. All right, so we would have locked our 75% right there for our second instance of taking profit.
Yep.
Then we get our higher validated low right here. Let me just change this to a red and make it nice and fat.
Higher validated low should be set at 199, I believe.
Well, let's find out.
I think that's what I did.
199, look at that.
Perfect.
So the stop loss will go at 198, right? Because we want to, as soon as it breaches below that, we exit. 1, 2, 3, 4, 5 again. So we get another instance of take profit right there, and then we get a higher validated low right here. Okay. 1, 2, 3, 4, 5, 6, 7. These are crazy. Another 5 candle run right there, and then we would lock some more profits here. And basically, you can repeat this until you run out of shares, which on a bigger account, it takes a lot more of these, right? Because you're just
on this one with how small the price was. I was able to do 100 shares.
Okay, yeah, so
$150.
Nice, yeah. So at some point, since these are kind of percentage oriented, you're gonna run out, or you're gonna run down to really small positions. Now, if you got like a 6-figure account, that's still a pretty substantial amount of shares, even though it's like maybe 0.2% of that 6 figures. So
yeah.
So it's always worth just kind of getting in the habit of doing this, and you can always just cut them early anyway. The only downside of that is you don't want to lock your profits early and let your losses go to their full size, right? So in this case, we got another higher validated low as soon as this guy closes, and then a series of 5 candles again. Because eventually what you're going to have is a lower low. You're going to break that higher validated low, and that's really what tells you to stop trading this. Right? So you can literally just ignore these if you want. I don't recommend that personally, but you could if you wanted to. So there's a higher validated low right here. You know, a little bit of mix here. 1, 2, 3, 4, and then nothing. You get a higher validated low right here. So let's see if that breaks. So this is 585. This is 5. That doesn't make any sense. Oh, my Webull just got weird. You see that? It says 585. And then if I move it over here and then I move it back, it says 288.
What?
Webull, what are you doing, buddy? So anyway, it's 288. And then this is 288, so it didn't break below that, right? So this becomes the higher validated low. 1, 2, 3, 4, right? So nothing yet. We got a higher validated low right here. As soon as this guy closes, and then we're out completely right here.
That's exactly what I had.
Beautiful. All right, so I think at this point, you're pretty much set on this strategy. I mean,
yeah,
it makes sense, right? It's easy.
It's simple.
Yeah.
It's just numbers and patterns.
It's just shapes and colors, man. Sesame Street stuff. But most traders make this the most complicated part, when in reality, it's the simplest part. You just got to set some rules up for yourself, and then the hard part is following them. So
yeah.
And then what was your net result on this position? You said you started with 100 shares?
Yeah, so it started at 152, ended at 224.23 with a profit of $72.23, which was 47%.
Overall on that ROI.
Yeah.
Nice.
Plus 47%.
Oh, yeah. Wow, all right. And does that make...
pretty good.
Like, do we feel bad at all that we missed this stuff?
Probably not.
No,
but
there's going to be plenty of opportunities. We can always look at it, right?
But if I was still on this, I probably would have found an entry again after losing it probably once on that other one. Well, no, because it's a down. I wouldn't have done it.
Yeah, why would you even hold that with 47% profit? Why would you hold it through this garbage, knowing you could just get back in?
Well, not hold, but like enter again. But I wouldn't enter because there's no positive slope.
Oh, yeah, no, that doesn't happen until right here, right? So this is kind of the guy that sets it all forward.
And then you just skyrocket to the moon.
Well, you got a positive slope here. You got a small red risk right there. So you would have stopped out, right? So one small loss. Then you got another entry right here in this candle, right? And you would have stopped out of that one. And that's okay, right? Because then you got this guy, and then I'll take those small losses all day long. I don't care about that.
To the moon.
Yeah. And if you look at this one, so like if I just put those lines back, if this was our trade, right? Obviously you would have had your 1 to 2 take profits somewhere, right? But these are all just higher lows until like right here. Right there. And then even there's no higher validated low until right here. That's your highly validated low. So, you got 1, 2, 3, 4, 5. You literally would have clipped the top on that one as well for your third take profit. And you would look like such a badass at Thanksgiving when your cousin's telling you how he's just getting into crypto and he's, all that stuff. And you'd be like, oh yeah, well I sniped AUR right at the top and I locked my profits down here at 459. The peak was 481 and everyone else got trapped and it had a massive bloodbath after that. So this is probably where your cousin's buying.
Yeah.
He's down here complaining to you about it and you're sitting on a bunch of profit because you had a clean system and you're going to have your small hits and stuff, but it doesn't matter at the end of the day.
Yeah.
Like the small losses.
I need to figure out or start practicing on live.
Yeah. Now this is
the next step.
Well, we're good. Did you get a paper account set up for your real-time trades?
I have one on Webull, so
okay.
I can, yeah.
All right, and do you have a plan for position management? Are you going to use the 1% rule, or are you going to let it kind of dictate what you do?
I think I'm going to kind of just do what I've been doing with these paper trades where I kind of judge. So I have the 30% of my portfolio is for speculative, and I kind of judge like based off of price of this, how many shares, and kind of do something like that. So like for this one, for example, it was $1. I was like $150 out of the 300.
I got you. Okay, so you're using a fixed dollar amount, but you're breaking it up into the number of shares based on how many you can buy with that amount.
Pretty much, yeah.
Okay, so that's a great place. That's a perfectly good place to start. And there's kind of pros and cons, right? So the pro obviously is you're going to make more money than you would on any single trade with a 2% rule, as long as it's a profit, right?
Yeah,
it just makes sense. But the drawback here is that sometimes, even if you have a winner, it can underperform your losses, right? So your losses can still be bigger, even though they're small. Maybe percentage-wise, they can still lose more dollars than your profits if your profit percentages are smaller. Does that make sense?
Yeah, because you're risking a little more.
Yeah. So, perfectly valid strategy, and I want you to test that. I want you to get that data. I want you to collect 10 real-time trades at some point, or start with 5 if you have to. But I want you to get 10, and just look at the data. Say, okay, this is my like emotional obstacle. I wasn't able to stick to my plan for this trade because I was thinking about this or I was feeling this, and maybe this is why. And then you just come back to me and we could talk about that. Be like, oh, I saw it run last month, so I figured it was going to happen again, right? And that's kind of the stuff that's just it's going to happen. It's going to get in your head and you're going to be like, why the hell am I doing this? And then we're going to answer that question together, right? Because it's going to happen.
Exactly.
It's like when you first start playing baseball, like you're going to get hit in the face with the ball. It's going to happen. It doesn't matter. But then the other part of that is going to be, is the data truthful, and is it telling me that this is a viable strategy, or are the losses just still inconsistently outperforming my profits, even though I'm winning more than I'm losing, right? So that's kind of the information that I want you to collect, and then you can kind of make that decision for yourself, because it just works different for different types of people based on what you're trading. So absolutely, yeah, try it out, and then if and only if that becomes an obstacle, then we can use like the 1% rule and stuff just to kind of guarantee those outcomes. But if you're finding success without it, I want you to be more profitable, so don't worry about it. So, but we don't know that until we get some data, right?
Yep.
All right, beautiful. So about that 70%, what are you doing there? Oh, sorry. You had a third one, right?
Yeah.
Oh,
I had one more.
What do you got?
So while doing the business notes on the company, just a random company, like you said before.
Yep.
I decided to try that one.
Okay.
And while I was looking at their numbers, I noticed back in 2020 that they did really good. So I decided to, so this is DIN, D-I-N.
Oh, okay. Is that a Chinese? No, Dine Brands Global. Okay.
Dine Brands Global, yeah. Applebee's, those kind of companies.
Hell yeah. I'm going to have Applebee's later.
I'm not going to lie. That's how I came up with the idea for this one.
Hey, that worked
for the brand. I looked it up, and I saw that they had dividends, and I was like, "Ooh, there's a brand right there."
That's what I'm looking at.
Where's my stuff?
Doesn't look
I'm
like
down.
they're outperforming that though.
So let's see.
This chart though.
I did April 16th, 2020.
Oh, right in COVID. All right.
Yeah.
April
When
16th,
it actually
2020. Oh yeah.
it actually had a pretty good drop off, and then
Beautiful. Hey, that's the way to do these though. Honestly, you get those recovery plays. That's pretty nice.
right at the bottom of that.
Okay. So you were watching the sell-off. We give it a few days, maybe a week or so, and then we start looking at it for potential entries to trade the recovery back up, right? That's one of Lee's favorite strategies. He loves doing that stuff.
Yeah.
Somehow he's able to get him like down here, though. He's insane. But we don't have to get him that deep in order to be successful. So, all right. So let's say you're sitting at your house now. You got your stimmy check, right? And you want to trade something. Everything's shut down. You can only grab up so much, right? You come over here, you wait for that positive slope to happen, right? You see this massive sell-off. You're just waiting for the moving average to correct itself. You see that happen. You see this tiny red candle just above the moving average, and everything's starting to line up, right? So on the day of April 16th, you plot this out. You go to bed, right? You wake up, maybe you play some video games or something, and market opens, and you catch the break to the upside. Now, maybe you catch it before it gaps, maybe you don't. The level itself is still good, so you could always just enter right here on this guy if you wanted, right? Same concept. The goal is just to not let it drop below this big fat red line. Sound good so far? All right. So we take an entry on this guy. We got our take profit somewhere up here. Where'd you put yours? Entry on this would be 2739.
Wait one sec. What date did you put your entry at?
The entry would have been on April 17th, 2020. It would just be 1 cent above this guy, so 2739.
27:30. Okay, yep, that's all right.
All right, and then your stop loss would have been 2554.
Yep.
All right, beautiful. What was your take profit? I'm too lazy to do the math.
Take profit I had at 1 second. Let me make sure it's right.
Should be like $32 or something.
3109.
Oh wow, I was way off. Okay, 3109. All right. All right, cool. So you got your take profit somewhere, and then I don't know if this is just Webull weirdness. Okay, I was gonna say it said 32 something over here, but now it says 3104. So, oh yeah, see it says 3260 up there at the top under the H.
It's so weird.
Right now, if I move the mouse over here, it says 3104. So this wouldn't have hit target, right? And it would have fallen back down, and you'd probably feel some emotions about that in real time, right?
Yeah.
Which when you look back, it feels a little bit silly because you're like, it just didn't hit target. It's okay. Yep. But our brain automatically says, if I don't get this right now, I'm not going to get it. And then you start to panic, right? And then you're like, I got to sell it. And that's how we clip profits. And we let our runners fall down and compromise and say, oh, it'll bounce back because we're seeing a recovery on this one. And that's where we get that upside down profit loss ratio. So in this case, if we didn't catch that gap, we could have caught the pullback on here. Otherwise, if it just goes, that's okay as well. But we had an opportunity here to get back in. So the actual entry probably would have been on the 20th. Right.
Oh, okay.
Because this might have gapped up. Yep.
I didn't move my candle, so.
That's okay, because worst case scenario, right? Let's say you miss this guy, or let's say you miss this one because it gaps up. This is a red candle. You could just grab it on the next day. Or the next time it breaks over, right? So it really doesn't matter. Like, that's what I'm saying. We're just trying to get in the ballpark. We don't need to be in the right room of the house. We just need to be in the right house, All right, so in this case, one way or another, we would have been in here. We've got our defined stop loss, and that's all that really matters. I don't care about the entry specifically. The entry only helps you identify when the bulls take control back and where your target should be at the end of the day. That's all it does. All right, so in this case, we just don't do anything, right? All this sideways stuff, it's not up or down, it's just sideways, and then we finally break, and we hit our take profit. Okay, so we lock 75%. Now we've got 1, 2, 3, 4, 5 candles with higher lows, so let me just change this to a dashed line, just like we do. All right, we'll just follow it up or down, right? So we would have locked another 75% right there. And then we're looking for a higher validated low in this case. So we come back to the moving average. We get it right there.
Yeah.
As soon as this guy closes, we can move that up, and then we can go back to bed, right? Then we wake up the next day. We got 1, 2, 3. Nope. Nothing. All right, so we would have stopped out
We
right
stopped
there.
out. Yep.
Beautiful.
That's exactly what I had.
And that's right at target. All right, so that's good stuff. So you had your initial take profit, you had a partial take profit, and then you had your stop loss above your break even, but just below your initial target.
Yeah, and I think on that one I was positive $32,
Nice.
which wasn't too bad.
Okay. Beautiful stuff. I like this. So now that you're out of the trade, right? So right here, you're out. Sorry.
Mhm.
You know, again, if you just got a handful of tickers and you just keep trading the same ones and you know that it respects the strategy and it's got good outcomes, you know, you can get it till it's gone, right? So here we've got a red candle. I haven't looked ahead. I'm just kind of going through the motions here. So we would head an entry there. Take profits somewhere up here, right? I'm too lazy to calculate all that, but we got multiple candles in a row. That's more than 5 in a row with higher lows, right? So up here so far. Let me change that to a dashed line. So that would have been the second take profit. So the first one's somewhere around here. Second one's right there. And then we get our higher validated low right here. So let's move that line up. 1, 2, 3, 4, 5. So we got another, I'm sorry, 1, 2, 3. I lied. 4, 5. There we go. Now we got 5. Does that make sense? 1, 2, 3, 4, 5?
Mm-hmm.
Okay. Lock those profits. Look like a badass on Thanksgiving, right? And then we would have stopped out right there on this guy.
Just
right?
keep doing that till
Keep doing it, man. Till it's a downtrend.
till you're driving your Lamborghini to pick up the kids at school.
Absolutely. So this is not once but twice you would have sniped the absolute top on those peaks. Then again, you get another opportunity right here. You get another one right here. You got multiple opportunities all along the way. Even if you get in on this guy and you stop out, you get another perfect opportunity right there, and it just boom pushes. So I like this a lot. This is a good ticker for this.
Yeah,
I'd probably change the moving average a little bit.
A lot of ups and downs on this one.
Yeah, absolutely. That's good stuff. I'm not a big fan of the daily chart though, because it's got a lot of gaps. So I'd either change the time frame a little bit.
I did notice that.
Yeah, I would also probably increase the moving average a little bit too, because this should just be one straight line. Right?
Yeah.
I don't like these staggered channels like that where they'll do this, right? And this is kind of, we see it right here. It's just hard for me to illustrate it. So say you've got like this, like a nice defined channel. It'll shift, and then it'll come over here now. So same direction, same slope, but it's like, it's offset. That makes sense? That's kind of weird. I hate seeing that. So that you kind of see right here on this guy. You've got that channel, and then it shifts. And then it carries on over here. Same exact thing. It's just a different, I made that a little sloppy. There you go. It's just offset. So like those broken channels, I guess, I don't like those. They're really solid for reversals and stuff, but what happens is a lot of times you get this little wedge, this little triangle part right here, where that cup, people think that this is a change of trend. So they'll buy this, say, oh, we got a higher high and a higher low. We're pushing higher. So you can see the volume surge right there. It's all desperation, and then it just slams them back into a downtrend. So that tells me that institutions are looking at this stock and they're waiting. Currently, anyway, but nobody's really hitting the button just yet. So and we get another kind of break right here. It's worth keeping an eye on for sure. And you got earnings coming up next month, so maybe that's worth adding to a watch list.
Well, on that note, if we segue to the business notes that I took.
Yeah.
I say that because their financials and earnings do not look that great.
Oh, okay. This is good. This is why we do this part of it. All right,
I'm actually kind of curious to see what their financials show up to be.
All right,
soon.
let me just switch this.
When was that? When's their?
I think it's middle of next month, isn't it?
I'm trying to get back to the start. Looks like November 6th.
Yeah, November 6th right here. Dine Brands Global to release third quarter 2024 earnings. All right.
That'll be interesting because it went down.
Yeah, no, for sure. That's not good. So one thing I also don't like to see in a company like this is this sort of fluff article. This is an investor relations pump communication. if that makes, it's just having some experience in the realm. This is kind of it's just an engagement grab. So the company just pays a little money, and we kind of do that on the PB side, but we only do it to companies that actually have like potential. Like I'm the one who makes those pages, for example, so I make sure that the information's accurate and stuff.
Okay.
But I also, being in that position, it helps me kind of, at least I can recognize AI, right? At the very least. Because I know what our competitors are doing, and it's just fluff. Like there's nothing really useful in this content here.
Yeah.
Except for maybe this, right? I don't like this stuff. It just seems a little desperate. But anyway, I just don't like seeing $1 billion company kind of rely on that, or $500,000, I guess, or $500 million. So let's go ahead and just glance at their financials really, really quickly. So revenue, right? Always looking at revenue first. It's up, but it's not consistent, right? It's not.
Yeah.
There's not like a whole bunch of volatility. They're not like down to 20 here and up to 800 here. So that's okay. Gross profit took a little hit in 2020. That's the COVID dip, right?
Yep.
Relatively stable. Operating income, right? A little more inconsistent. Let's take a look here. As a shareholder, I care about the EPS, basic and diluted, right? That's not terrible.
Everything's always in 2020.
Yeah. Oh, yeah. Well, food restaurants, yeah. As opposed to non-food restaurants. Interesting topic. Free cash flow. So this is not what I hate to see, but it's not what I like to see, right? Like what happened in 2022 that caused that to happen? 2020 is understandable. 2022, not so much. But they're recuperating. So now the goal here for the next like 5 years or so is to see if they'll be able to outperform 2021. Because in theory, this should have been one of the most devastating years.
Well, my thought is a lot of things started opening back up, including restaurants. So they're well, I don't exactly know what the free cash flow means, but
were they taking advantage of the COVID era to acquire partnerships and things like that, or were they just kind of sitting on their hands and paying their bills and hoping things open back up? So that's worth looking into the SEC filings. But either way, they should have been. Things have been open up for 4 years now, well, 3 years.
Yeah.
So there's no reason 2022 shouldn't have been up here, right? So
Exactly.
something happened there. Dividends per share. I don't like that they dipped into that, right? Obviously they had to in 2020, but again, 2022, if you got free cash flow up the wazoo like that, like outperforming your pre-COVID times, and then your dividend gets cut in half, like that's not good. That's kind of a red flag. All right, so let's take a look at their balance sheet. Cash and short-term equivalents, down. So that's kind of what I'm thinking. I think they're just burning up a lot of money. Total current assets decreasing, total assets decreasing steadily. Now let's look at the comparison. So we've got 319 total current assets, 394 total current liabilities. So short term, their intra-year scheduled debt obligations and all that stuff outperform their short-term liquidatable assets that they could sell if they need to cover all their bills. So that's a red flag, right? So that means their current ratio is less than 1. Total liabilities, 1694 assets, 1925 liabilities. So their overall obligations and payroll and rent and all that stuff is out. It's bigger than the amount of assets that they can use to leverage to pay their debts. So that's upside down. That's not good. I don't like seeing that. Net cash negative for the last God knows how long. That's their debt. Let's look at their total debt. They got pretty high debt. It's $1.5 billion. It was up to over $2 billion in 2020. That kind of makes sense. It's coming down, but it's not coming down quickly, right? So this is going to be a war of attrition for them. How much debt can they endure with upside down assets to liabilities? And what are they doing to fix that? Cash flow. Let's look at their net income. Not that great. For this size company, that's less than 10% of where they should be at. So not that good. Operating cash flow, that's going to mimic the other one pretty closely.
Yeah.
For this particular industry, but let's see what their investing cash. So I would expect this to be up, right? Because if they took advantage of stuff and did kind of the right thing during COVID lockdowns in 2020, they really could have came out of that solid. Like it looks like they had a lot of cash flow up here, and then it got decreased, and then they just went in the hole on that particular metric, right? So not good, right? So if you put your mouse over this, by the way, like you were saying, free cash flow, you can put your mouse over this on stockanalysis.com and it'll tell you kind of what it means. So feel free to spend some time looking at all that stuff.
Yeah.
But yeah, it's the investing cash flow is the total change in cash from buying and selling investments and long-term assets. So they didn't have any returns on investment over that period of time, except for during 2020 when I'm sure they just sold a bunch of properties, so or just didn't have to pay debts. And the net cash flow is always important to look at. Just they're finally positive after 3 years, but this is the first time since COVID that they've been net positive on net cash flow. Scary. And we know it's not the result of investments, right? All right, and then free cash flow again. That's just going to mimic all that. So let's look at. You can look at the ratios if you want. It just kind of summarizes all that stuff. Like where's their current ratio, for example? 0.81. If you want to put a specific number on that ratio between current assets and current liabilities, you just divide one by the other and you get current ratio, and that's down. That's not good. So
Should be going the other way.
yeah, it should be over 1. It should be like 1.5, 2 minimum, and then climbing, right? Because food's not going anywhere. And then dividends. So they get a 6.5% dividend yield. It's quarterly payment, and they've only grown it 2 years. Because again, they had to dip into it in 2021. Or was it 2022? It was 2022, I think.
Yeah, I think so.
Yep. So $2.04 per share on a $31 stock. Not that great, especially because it's declining, right?
That makes sense, yeah.
Yeah, not too happy about that. So yeah, it's roughly, 51 cents. You can see it's declining over time, right? So it was 97 cents in 2017, and now it's 51 cents in 2024. So 7 years later, it's cut in half. Not that good. So here's the dividend overall, and then this is the growth of it. You can see it took a pretty nasty hit here in 2018, and then it kind of saw a surge in the last quarter of 2022, and that's just something happened. So it makes me think that what they did is they probably took a portion of their free cash flow and they just dumped it into dividends, hoping that FOMO traders would just jump in and be like, this is a hell of a dip. We're going to take advantage of it. And yeah, I'd have to look at the SEC filings to figure out where they put the rest of their money, but it's not good.
I was going to say, yeah. It's kind of...
It's IHOP and Applebee's. Like,
yeah.
How do you mess that up?
Oh, IHOP makes sense.
Yeah.
We lost our IHOP here locally, so...
my condolences, man.
I know. It's
I love
really
our IHOP.
sad. So
it's crazy.
I guess it kind of makes sense.
Yeah, but
however, Applebee's
could stay open just on their 3 cheese chicken penne and boneless wings if they wanted. This isn't sponsored by
shrimp.
Applebee's, by the way. Yeah, the Fiesta Lime chicken. Like they got a sizable menu there for
$1 drinks.
Well, the Costco model isn't for everyone. One thing that I do like about this, though, is besides the trash financials, is it's got a beta of 1.73, which tells me we don't necessarily want to buy and hold the stock, but we can trade the hell out of the volatility.
Yeah.
So that gives it a roll, which means I either have an open slot.
It's not a good dividend stock.
No, not at the moment. No. But that tells me, this now has a specific role for my portfolio, and if I have an open slot that fits that role, I can trade it. Otherwise, I can just add it to a list if I like it, which I don't, or I can just get rid of it and move on and get my time back on this planet.
Yeah.
All right, that's good stuff. So now, just for the sake of being thorough, right? Because I'm not going to be looking at this to buy it, but for entertainment purposes, I do like to look at these 10Qs and see if I get an NT 10Q, just to see how much of a bullet I would have dodged. So nothing in this case. That's good. So do we got any 8Ks that I can giggle at? We got a 7.01 here, so I always like to read those just in case. We got some earnings. We got a vote coming up. We got another 7.01. And again, those are just a fair disclosure. It's regulation fair disclosure, right? That's what they're called. And that's just something that they don't really fit into any other item. But those are always worth reading because sometimes they try to sneak stuff in there. There it is. Articles of Incorporation Amendment. That's not good. I never like seeing those. They did it twice. And there's a vote right there. This is back in 2023, so let's just take a little glancey poo. All right. Departure, here we go. Announcing the retirement of Mr. Johns and the appointment of Mr. Kim. Okay, so this is just kind of updating that they had a change in their board. That's useless for me. May 14th, 2024. So these are the results of that vote. 1 year term with respective votes set forth for opposite their names. Blah, 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 blah. So it's just vote stuff. A stockholder proposal regarding climate change policies and climate change risk disclosures. Approval on an advisory basis. So right here. So they're trying to give themselves a raise. So it looks like it passed. So they're struggling financially, and they passed a vote to give themselves a raise. Yep.
Ouch.
So I don't like that. And the ratification of their independent auditor for their earnings. So this earnings coming up should be pretty spicy if they're changing auditors and stuff. So now we'd want to look obviously at the earnings and see if there's any conflict or any of that good stuff. But again, I don't really care too much about this company, but
it's just interesting to see.
Yeah, it's just like telling a story. Another board change, so they're just hot potatoing. That's not good.
Especially a random company that you never really think about.
Exactly. Yeah. And then this is just the announcement of the previous shareholder vote thingy. So, yeah, it's good stuff. I mean, it's good practice. But again, if I was looking at this stock with the intent to trade it, I would have stopped right there before I even got to the SEC filings.
Yeah.
Yep. As soon as I looked at the financials, this first sheet right here. Well, specifically, my breaking point would have been when I saw
the assets and liabilities.
Yep, not even the current ones, but just the total assets and total liabilities. Absolutely, I would have stopped. I'd be like, nope, this is less than 1. There's no reason for me to look at this.
So we're looking at break even or more assets and liabilities usually.
Yeah, you always want more assets and liabilities. Now, sometimes you'll get a little bit of you'll get a little bit of a discretion here with the total current assets and current liabilities. Because that can change, right? And there's different reasons for that. But the total assets should include all the reasons, so it shouldn't be smaller than the total liabilities.
Okay.
So that's an absolute deal breaker for me personally. So that would have been, that right there would have been where I stopped, and then I could just click on this little ratio or the overview sheet, and I'd say, okay, what's the beta? And then I would have said, okay, the beta is 1.73. Now it's worth maybe looking at the chart. That would have been it. I wouldn't have looked at the SEC filings unless I want to see if there's like a shelf offering or something I need to be aware of. But I wouldn't even swing this one. I'd probably just look at intraday stuff if it has it, or some sort of, spread or something like that if the options chain was healthy. Which I
just want to point out that somewhere in my research on the two websites, I came across an analysis consensus.
Okay.
And that it's at a buy right now with a target of $43.
Hell yeah. Now, who do you think wrote that?
I thought that was interesting. Probably the...
what are their interests?
People giving themselves a raise.
Yeah. I wonder who would want people to buy this stock. Huh.
I just thought it was kind of funny. I saw that.
Yeah. No, it's good. So some analysts are legit. Like some of them just use the outdated DCF model, and they're just like, oh, I'm just going to plug in a bunch of numbers. A lot of computers do that now for them anyway. But some of them get really manipulative about it, and they're like, no, this is a good buy. Trust me. And then they're the same ones that gave 2 downgrades so they can get a better discount. Then they'll just pump the price, sell, and they'll just leave everyone hanging out up here, and then the price is down here, 3 months later. And they're like, hey, guys, it's a really good buy opportunity down here. So, yeah, you just got to kind of look into who's calling those shots as well.
Oh, yeah.
A little sketchy there. But, yeah, I mean, from a technical standpoint, it doesn't look terrible. If you're okay with the downtrend and you can trade those reversals and you're all right
and the
grabbing
risk
a recovery.
of the next earning.
Yeah. Well, you just avoid those, if you want to. But
if it goes down again, the stock's not coming back.
Right. I mean, eventually it will. Dead cat bounce and whatnot. But
True.
But yeah, I mean, this tells me right off the bat. It's like, okay, it's a trash investment, but it's a good speculative position. So I'll trade the hell out of those all day, because you don't have to get committed to them. You just in and out, in and out, in and out.
1%.
That's it. Now, the only thing that we need to be mindful of when we do that, though, is that this chart has gaps on the daily time frame, and it's got these broken channels. So you got to be careful about that. But once you get a system in place, you get a little plan. Maybe look at some other time frames, right? Like the 1 hour doesn't seem great. Let's check the. Oh, that's a beautiful 2 hour. Ooh wee! Look at that. I'd trade the 2 hour.
It's 3-4 different solid trades throughout the day.
Yeah. Now again, you
Call it.
got to be careful with these gaps though, because that's what'll kill you on this one.
That's overnight, right?
Yeah.
Yeah. So just don't hold it overnight.
Right. But yeah, I mean that's it. So that with that in mind, right? We've got these red flags. Okay, we've got the article amendment. We've got the upside down assets and liabilities. We've got the gaps on the daily time frame. Therefore, I know that I can just trade the earnings on this if I want to. Just when the volatility's there, when the volume's there, I can kick it down to a lower time frame. I can see if it's got some goodies for me. If it doesn't, I pass. Otherwise, the only other option there is to build in slow as hell. You buy a small piece, you wait a couple of weeks. You're 40% down. Then you place your second buy if you want to average down. But we don't have to do that. So yeah, I mean, down here it's got potential, right? It's a nice strong zone.
Daily, or is this on?
It's the weekly.
Weekly.
Yeah, this is all the way back 2004, 2005. So it's got a nice strong zone to it. It's worth maybe watching, but short of just trading, yeah, just trading this earnings catalyst, I wouldn't really look at this for much more.
Yeah,
that's it. That's as complicated as that needs to be. So if I look back at the last earnings, we can see, did it go up, down? How did it behave? Was it something that we might have been able to get a hold of? Is it worth it? Do we even want to trade earnings at all? I mean, I don't know where it is. I'd have to go back up in the time frame there. Anyway, you get the idea though, right? Like this is one that we've identified several reasons not to trade it.
Yeah.
So I'm okay just kind of passing on that one. All right, cool. So was there anything else that you had for this one, or did you want to?
That's everything I have. I just kind of filled out all the financials.
Okay.
Stock prices and stuff like that. I even noticed the beta.
Beautiful. Now let me ask you a question. What is this company currently doing to improve their situation, if anything?
I did not find any, I didn't look for anything on that.
Ooh, okay. Well, that's an opportunity, right?
Yeah.
Go ahead and pull something up here.
And say what's the spot to look for that? Just Google.
Yeah, just Google. So the cheater's trick here is to Google Dine Brands Investor Relations. Little cheater's trick. And then that is going to bring you to their investor website. It's usually like an alternate page. Then you can look at events and presentations, and then you can look at all the earnings conferences and all that. But what I'm really looking for is a corporate presentation, and I don't see one here. Yeah, that's not good. I always like to see those. So investor overview will have to do, right? Conference call. I mean, you might just have to sit through one of these, unfortunately. But we can always just look at the news and see what they say. You're just kind of getting a feel for what the company does and what it plans to do on the public side of things. Obviously, you won't know what's happening in the boardroom, but you can they'll announce partnerships and things like that. And this one, I called this one out as BS, right? It's fluff. Recognizing your brand franchisee of the year, that's great, but it doesn't really help the revenue. Weekends to the weekdays, celebrate new value-driven house faves. So they're changing their menu up a little bit, and whoever decided to partner with a rock band is probably one of those directors that got turned over. Yeah, you got your dollar cocktails there. You've got your NFL partnership potentially, Pick Six Mondays. So that's kind of a recurring thing. More leadership turnover. Yeah. Honduras. Okay, so they're growing. They're kicking it up a little bit. All right, boneless wings for 50 cents. So it's really just a lot of corporate turnover, and it's a lot of menu-based changes. Right, so they're kind of mixing it up a little bit, but I don't really see anything strong as far as something that the company's doing to partner with another chain or maybe to acquire something. It seems like they're just kind of treading water and making little fine-tuned changes. Yeah, I don't really see too much there. Ooh, hand-breaded chicken sandwiches. Now that's a separate level of interest. I'm hungry.
That's a different interest.
Yeah, but I don't see anything really significant to change this company's outlook, right?
That will increase their earnings a tiny bit when you go there tonight.
Yeah, Maybe. But that's the thing, though. I mean, if you launch 50-cent wings and dollar margaritas and whatever, how many millions of people would need to take advantage of that before it affected your revenue by $1 million? At least $1 million,
True.
right?
Yeah, because it's only $1.
Yeah.
You get a lot of people in. For example, that's how I actually started looking at this. Was me and 8 of my friends went out there and we all got dinner because we saw the dollar drink. So
it's the Costco model. You offer something valuable for cheap, and then you get them in the door, right? You may or may not take a little hit on that on the back end, but people are in your store.
But then we spend all the money.
Yeah. Now let me ask you, how much are you guys going back? Is that sustainable?
I mean, we don't really go there too often, but the friend group gets together out there every so often, especially when they have those deals.
Yeah.
But it's only when they have the deal.
But you're going there for the discount. Yeah, you're conditioning your audience to show up just when they can get a discount. So that's not good.
Exactly. Yeah. Yeah.
Now, how many millions of dollars do you think it would take to settle the difference between the assets and liabilities here? About 300 million? 250 million? How many people are in America? Like 300 million?
So everybody needs to go get...
Every man, woman, and child needs to go and get a dollar margarita. Sorry, kids.
If you have a kid, you got to get 2.
Yeah. So that's what I mean. Like, that's not substantial enough of a change to fix this company. So they really got to step it up and just do something right. Like, if the CEO of Applebee's is listening to me right now, I would like to talk to the Dine people, and we'll work something out.
Could you imagine?
I want to help you. I want to help you fix your company. But it's got to be a cultural thing. It can't just be a menu tweak. So let's work on that together. You can get your own one-on-one. All right. So, so with that said, is there anything else that you want to work on right now, or do you feel like you want to start getting into the paper trades and kind of seeing how you behave real time? That's where I'm interested.
I think the live or like real time paper trades on a shorter time frame or a quicker time frame is more my where I want to start going, because as I get better at that, I can start doing that more and get back into it. Because right now I'm just kind of on the back burner. And I want to try to get back into it some more. So I think lower time frames, live trading, training.
Perfect. All right, so I want you to do me a favor, and this is kind of a double-edged sword, all right? I want you to do at least one of these trades on the SPY 1 minute time frame. No, not 1 minute, 5 minute. Are you familiar with SPY?
Yeah. Oh, yeah.
Okay. So what I want you to do here at SPY is not trade it. Like, I don't want you to do real money. I don't want you to look at options or any of that stuff, because I'm dangling basically a bag of heroin in front of your face, and I'm saying don't do heroin, right? So I don't want you to actually trade SPY. I can't tell you not to, but I want you to...
I've already done it before, but after that QQQ mishap at the beginning of my experience trading,
absolutely.
Very cautious.
That's good. You're going to need that. So yeah, I just, it's positive for now. So I know that there's going to be upcoming trade opportunities within the week, hopefully, as long as it doesn't just sell off and go H-shaped. But this is a really good opportunity, I think, to get you to be able to focus on something that has a lot of volatility and a lot of directional bias, and is also slow enough so that you can focus on it over the course of maybe 2 hours.
Yeah.
Or something. So you're not constantly looking, because I thought about the 1 minute and I'm like, that might work out pretty well. Because again, we're not looking at options, we're not considering IV and all that stuff, but the 1 minute has a lot of wicks, and that's a little too advanced, I think, for now. So I think just sticking to the 5 minute would be pretty good.
5 minute looks good.
Yeah, even if you don't really get anything this week, right? Because it might just keep going, right? Who knows? We got big earnings this week. Tech might drive, Tesla might drive. Who the hell knows? Right?
So you want me to do 5 minute time frame? 1 second, I'm trying to write it down. 5 min time frame. Paper trade.
Yep.
On the 20 SMA.
Yeah, and for this, since it's a $600 share essentially, I wouldn't worry too much about actually trying to trade a share on this one. I would just look at your analysis.
Just get entries and...
Yeah, so this one you're going to have to kind of have a little bit of self-accountability on this, because I want you to just identify it in real time. You can always DM me too and say, hey, this is when I'm entering, just to verify it or whatever. I'm not going to respond or anything because I don't want to influence your decisions, but I want you to have some log in real time of when you would have entered, because again, I don't want you to try to live trade this on a paper account because it'll take up 60% of a $1,000 portfolio. So
yeah, so I think what I'll do then is live paper trade and do note time frame.
Yep.
Note times, not time frame. Time of entry. So I'm going to do time of entry, and then I'm just going to plot candle.
Yeah, draw your lines out. Yep.
5 CRs and take profits and higher validated lows, stuff like that. But not look at numbers. Just look at the kind of
just look at the
the
patterns.
actual pattern. Yeah.
Yep.
Especially live. Live is the way to do it.
Absolutely. Yeah. So again, this is kind of for you to work on your own discipline and integrity, like in real time, because I'm not going to be there to say, oh, you did this instead. I want you to recognize, did this actually stop out? Am I kind of lying to myself? Because that's really where we got to dig into, and that's where the bulk of the work is going to come in. So
yeah,
if you can do that in real time, you got so much advantage over every other trader. So,
and I think 5 minute works well because that's long enough to where I can actually plot things. And
yeah, it's as low as I think I'd want to go with you right now.
Yeah.
Now in the future, though, yeah, we're gonna go down to the 1 minute. We'll do ticks and stuff like that just to really ramp it up, but that's not going to be anytime soon.
Yeah.
And we want to look at SPY as little as possible. Like, we don't want to stay here. This is just to kind of show you it's okay to take a loss, because chances are you're probably going to end up with a couple losses, right? Because, just SPY is so far up right now, and it's there's a lot of potential for downside here. So, but the main advantage here is that you're going to identify those losses immediately, and you're going to see the value of those stop losses if that does happen.
And I'm gonna, when I plot it, I might go back and mess with the money and see like what I would have made if and lost.
Yeah,
but sure. I'm just gonna throw down lines and plots and notes.
Yeah,
and
just 100%. Just focus on. Yep.
After I'm done, go back and see.
Absolutely.
How I did.
Absolutely. Like this right here, for example. That would have been an entry, and you would have stopped out. I don't care at all about the end result. I don't care about the P&L. I just want you to get the practice of identifying these shapes and colors and focusing on the patterns and execution in real time, and then your emotions and your thought process, because that last part is critical, and that's going to change when numbers are in the mix, right? Because they're going to scale up with those numbers, and they're also going to scale up inversely at a point to how small the positions are, because you're going to get frustrated and bored, and you're going to want to make money, and so too little is also a problem for a lot of people. So we need to identify that and find that sweet spot where it's like, okay, you're comfortable now. And then that'll kind of dictate where you want to keep your portfolio at for a little while so you can get comfortable. But since we're paper trading, I want that to be a small number so it's realistic. That makes sense?
Yeah.
All right. So let's make that kind of the main objective for the week. So just try to get me at least one real-time SPY trade that you can kind of validate for yourself and you feel good about, even if it's a loss. Maybe come back with some notes about kind of what your perspective was in the trade and whether or not you kind of deviated from the strategy a little bit or wanted to or would have, I guess. Because then I want you to paper trade one in the future and see if those notes also line up. All right.
Sounds good to me.
All right. And then on the actual paper account, I want you to just go ahead and trade whatever you want, right? Because that's where you're going to focus on your execution and stuff. And then that will give you I assume, a nice transition into the actual trading portion of things. I'm looking at Unity here because I kind of like this one, but got a little bit of a gap situation on it, so maybe not the best one. I'm just trying to give you some affordable tickers that you can probably play with. Uber's kind of trash there.
Live paper trades?
Yes. Yep.
Okay.
Yeah, so the SPY simulation one, that's an absolute. I want that by next Monday. And then any other live paper trades that you want to squeeze in there, feel free to go ahead. I'm interested in the results. I just don't care about the P&L.
Live paper trades.
Yeah.
Booyah. Any specific time frame you want me to focus on?
No, I want you to use kind of what we talked about last time. Just identify, are there a bunch of gaps, a bunch of wicks? Is it Morse code? Do I need to move up in time frame? Do I need to adjust the moving average? And then in theory, you give me that same data, I should get the exact same result.
It'll probably be less than a day time frame because
that
would only be 7 candles by the time we make it.
Right, yeah. No, for sure. Yeah, feel free to go down as low as you want. Just make sure that if you go down to like the super low, I wouldn't go down to the 1 minute ever, because that's really only for identifying things before they break up or down.
Yeah.
So I'd stick to the 5 minute or higher personally, but a lot of 5 minute charts just look like trash. So you're realistically probably going to be on like the 30 minute to the 1 hour for a lot of stuff.
Okay.
And that's okay as well. Just I would personally avoid things with a lot of gaps because that's going to influence your ability to focus on those positions in real time. So.
And we're not focused on money, meaning I can probably find some more volume tickers that are a little more expensive because we're not focusing on the monetary value.
Yeah, if you want to, yeah. Just make sure that portfolio, the paper one, is a realistic dollar amount that you can relate to.
So not SPY, but the other ones try to do more realistic.
Yeah. Yep.
Okay.
If you can, that way it just kind of it'll help condition your brain, I think, to be a little more used to those numbers. Because the only real obstacle I think you're gonna have is just when it's time to put real money in, and then when it's time to like handle a crisis. So like if you're in a swing position and something sells off like 20% and you don't catch it, you're gonna have some decisions to make about, what do I do with this position now, right? Because that's where every single trader finds themselves when they start. There'll be like a massive sell-off that they just couldn't control, and that's okay. And they're like, well, do I hold or do I sell it and put my money somewhere else? And that's where the finesse kind of comes in. So, but it's important not to finesse yourself in the process. So, all right. So I'm going to go ahead and end the recording. This was fun, and we'll catch up next Monday.